Well, joining us now is Larry Shover, Chief Investment Officer at SFG Alternatives in Chicago. Good afternoon to you, Larry. Thanks so much for joining us today. Let's just get a track on how you're seeing Wall Street trade today there, from your position on the ground, as it were.
Yeah, we started off in the positive. We were positive last night. It just seems like that Trump positivity continues to prevail in the market. It seems like people are chasing. There's a lot of seasonality getting towards the year end, and fund managers and investors of all stripes have been underinvested ever since July. So it doesn't surprise me. But what does surprise me is that the rally continues and is so resilient. We do, though, have to keep in mind that there is under the surface a lot of rotation going on that just isn't published when you look at the index itself. But there is a lot of pain going on beneath the surface.
Well, I did want to ask you about this rotation, and we've seen it emerge as a significant theme in that post-election investors playbook. Do you see this continuing? And as you mentioned, how strong are the possible headwinds from this rotation idea?
Oh, well, I think it will continue because I think we're just in the early stages. Something I've talked about since June or July, and that is ever since quantitative easing began, ever since rates have been near zero, there's been this huge grabbing for bond-like equities that pay a really good dividend. And so those are trading at very high multiples. And since July, August, we've seen a rotation out of those into more growth issues. And yeah, it's not fully fleshed out yet, but it continues to do so. And I think it will for the next year to come.
So where are investors looking then in terms of growth strategy? I understand that you've been looking at asset allocation in terms of a growth tool.
Yeah, I think right now, if you believe that the Fed's going to raise rates in December and perhaps twice more next year, then it would make a lot of sense to get out of a lot of these low volatility, high dividend paying stocks and go more into the cyclical sector, including energy and healthcare. I would be out or very underweight in large cap issues. And given the recent strength in the dollar, the 13-year high on a trade weighted basis, I definitely would reduce my emerging market portfolio. And that's really the only thing that I have done since January, because I was overweight emerging markets and absolutely got out of everything until this all pans out.
Larry, when you're speaking with investors over there, what are some of the concerns being raised? Obviously, there are a lot of uncertainties in the market between, the Trump election, between outlook for the Fed in December, also, that US dollar rally that we've seen. There's a lot of uncertainties in the market at present. But what are the concerns and issues that investors are raising with you?
The biggest one has to be the correlation or non-correlation between bonds and equities. I mean, that's something that has worked really well in a diversified portfolio over the past years, having a appropriate weight to fixed income, because they would be negatively correlated to one another. So if the stock market went down, you're pretty comfortable knowing that your bond portfolio would work for you. Well, we know clearly that has blown up, and I do think that's going to not going to work in the near to intermediate term. I think it's over. And so investors are really worried about, well, how do I diversify if this isn't going to work? Where should I be putting my money?
Well, I mean, with that in mind, it leads very nicely into my next question. What are some of the stocks that you're picking at the moment? Aussie investors will be watching Headwaters after Aussie-listed company Boral have conducted an acquisition of Headwaters, and we saw that touch more than an 8.5-year high in trading. But what are some of the stock picks where you're seeing growth and where you are perhaps guiding investors towards?
Yeah, I think I would be leaning towards the banking industry. Some of the bigger banks especially, interest rates, I do believe, will continue to rise, and that's going to help the banking industry as a whole. And also, when you look at valuations of banks, I mean, they definitely have gone up a little bit, but relative to the rest of the market, and relatively speaking, they're still quite cheap when matched against other industries. And I would do that. Also, I would go into like some of these growth names things like Facebook and Amazon, companies that don't pay a dividend, so people aren't buying them for the dividend, but on the growth prospects. And that rotation has already started to occur, but I would still lean towards that.
And how is the U.S. economic picture supporting the stocks and sectors that you're watching most closely?
Well, I think the consumption story is going to continue into 2017. When I'm saying to people to rotate into things like energy stocks, healthcare. These are stocks that won't be as affected by less regulation, which the Trump presidency is trying to propose, and also stocks that really have reasonably good valuations. And I think when you look at energy, banks, or healthcare, all three of those sectors are pretty good.
This has really been a pretty strong start to the week for Wall Street. Interesting, though, that we do only have that shorter 3-day trading week. With lighter volumes expected, how is this likely to play into these record highs that we are seeing?
Yeah, I think that's a great question. I think the moves that you're seeing now, the moves that we've seen the past week, are just exaggerated. And not just the stock market, but really every market that we look at. I think liquidity is much less than it typically is, and especially going into a holiday. So any type of move you see, increasingly so during the week, it's going to be perhaps not for real and just very exaggerated.
Absolutely. Well, with just 2 days left of that short trading week, we'll certainly be watching that volume level and again, a continuation of some of those trends. Larry, we will have to leave it there, but thank you so much.
Thank you.